Welcome to Small Cap Best of the Best, a production of Agoracom in which I, the founder of Agoracom, and Alan Barry Laboucan get together at the end of the week to discuss his best picks during the week and some of my picks at the end of the week. Alan, say hello to everyone.
Hey everybody, and sometimes me and George get into a little bit of fisticuffs over our picks. But yeah, we've got a good group to talk about today. So we're going to get right to it. Welcome everybody.
All right, so we're going to start off with a couple of non-resource plays, but we got to mention them because of some big. This was what I call the week of small cap record revenue numbers, and we'll go through them quickly. But first up is Virtutone Networks, VFX, on the TSX Venture Exchange. This is a sponsor of Agoracom, so always got to disclose that. But there's no denying the revenue numbers they put out this week. Their news was that for the month of April, they hit $11.5 million in revenues, which smashes their previous record of $9.12 million or $9.2 million in February. Back in January, February, they did 9.12, smashes it. This is on the heels of the company also announcing that they did over $48 million in revenues for the year. So, Alan, on its face, that's a massive number on its own.
Yeah.
But for those who are new to the story, you also have to remember that in its last fiscal year, Virtutone did $2.5 million for the entire fiscal year. So $48 million for this year, 48.8 to be exact, and they hit 11.5 for the month of April. So I'm not going to extrapolate because I have no idea. I have to talk to the company, and I'll let them speak about that. But man, that could be a potentially monstrous number.
And George, if you look at their revenue sequentially month over month and plot that over the last year and a half, they're on an exceptionally good growth pattern, and I like that combination. They've done they've added some people to their sales team, and
brought in financing to really tune up their servers and all that. So they're doing right things there.
Absolutely.
The other story is Xylitol Canada, a newer one to everybody here. XYL, also an Agoracom sponsor, and this is the first time I think I've ever spoken about two sponsors on the exact same show. But Xylitol, XYL on the Venture Exchange, they also announced record revenues annual just a couple of days ago. So they came in at $6.5 million in revenue, which is about 87% increase over their number last year, which is about $3.9 million. So these guys are doing some. Sorry, $4.5 million. I got to get that number straight. I'll get it later. But anyway, 87% increase is what we did. Because I'm confused there. For the first three quarters, they had $3.9 million in revenue. So somewhere around there for the entire year last year. But this is a company, and Alan, you've got some personal experience with it. Here's what's awesome about the company. They're a fast-growing natural sweetener company, all natural. It comes from, they make, oh, there it is, got the product right there. So they got, they make their product from tree birch, and they've got Costco, Loblaws, Whole Foods as customers. So they've hit commercial acceptance, and now they're starting to accelerate, and you've even got, and the last thing I want is they've also been fortunate enough to hit a perfect trend here, because you've got the mayor of New York, you've got the country of the United States of America that are trying to significantly cut down on sugars, big gulp drinks, trans fats, all of that unhealthy stuff, and xylitol is exactly what the doctor ordered.
Well, big time,
George. Your comments, Alan.
I changed my diet about 4 or 5 months ago. I stopped eating wheat and other kind of gluten products like that, and it's been very helpful. I've dropped about 40 pounds. Still got a ways to go, but so I spend a lot more time at those farmers markets, and I'm getting more into organic food and healthier food. And as I go to those stores, I see the same thing is happening in a big way. And then you go to a product like Zyla. This is a product of xylitol, and it's ketchup, and it tastes, to me, it tastes as good as Heinz.
Yep, I've got it in my house.
and it's half the price or half the amount of sugar as it's. So it's. I mean, I endorse the product. I buy the product. As you can see, I'm using the product.
And even the sugar that's in there is a lot healthier than the sugars used by all these food companies.
Exactly. So and you know what, George? It's not just me, but I talk to the girls help me out a lot with stuff I'm trying to change my diet with, and one of the girls at the place, she loves it so much she orders the candies by boxes because it's like half the calories. It's a good tasting thing. They put out really good products. And if I was getting in the food business these days, I'd want to get in that organic food kind of trend because that's where the margins are, George.
And I got to tell you, so everyone at home knows, they don't just sell the natural sweetener in a bag. So, just like a sugar bag, we've all been used to our whole lives with that 1-2 kilo bag that we all used to pick up from the stores. So Xylitol's got that, but like Alan's saying, they've got ketchup, sauces, toothpaste, lollipops, jams, you name it. They've got this product. And watch the interview I had. I'm going to leave it at this. Watch the interview I did with Matt Willer, the VP of Sales and Marketing. If his energy isn't infectious, and more importantly, if it isn't extremely logical, where you actually see the path over the next 5 years, I don't know what is. But great product. Big shareholders, by the way. Dundee owns 29%. So you've got big shareholders, you've got big customers, and now you've got big revenues and big growth. So got to do your research on that because I can't say anything more.
And a big trend shift in the consumer market, right towards these kind of products.
Yeah. So great results. So good on them. Next up, and that, by the way, again, that's Xylitol XYL on the Venture Exchange. Next up, Research in Motion, BlackBerry.
BlackBerry,
I made a call,
the one everybody hates these days.
I made a call last Friday, a week ago, on Twitter that I was stalking it. I was loving the technicals. I thought it was oversold. That was when there was a 720 range or so, but I still want to watch a couple of things. Remember, I'm always willing to buy higher if it confirms something for me. So on Monday, I came out and said, bam, I'm buying my first half position. I think it was about 745 or something like that. I'm seeing something potentially explosive in BlackBerry, and then lo and behold, by complete fluke, I post that on Twitter. I hadn't watched your morning show yet, but you actually happened to pick, and you and I have never spoken about BlackBerry, or at least maybe once 8 months ago, and I even doubt that. But you and I never speak about BlackBerry, and we both pick it on the same day. That says a lot. So I'm not picking up for a day trade, actually. I want to give it some room to go. This isn't one of my quick flips. I mean, I'm up about $2,500 on it already. I'll move my trailing stops up. But I'm looking to add more at this position. So I'm going to average up. I'm probably going to buy another 3,000 shares and let this have its day for the next few months. Alan, what are you seeing?
Well, for me, George, it's a turnaround play. And, back in the 90s, one of the things that I used to notice on a regular basis, George, was almost once a year you could find one of these big cap tech stories that had fallen on tough times and everybody hated it. And oftentimes those would be big turnaround plays that turned out really good. BlackBerry is one that I'm really liking for that purposes right now. I'm picking it as a turnaround play. I think I'll be talking about this one a lot into the future. Now, any turnaround play, what's crucially important is that you have a management change. Without that management change, I don't. They tried it once before, and they brought someone in from internal. I hate those kind of plays when they do that because they're the same team that drove you into the ditch. You need somebody else to drive you out.
And it's harder for an internal guy, to kick some ass with everybody else because say, hey, Alan, you're the same guy that I knew last week when we do this video show. Now you're calling the shots. Give me a break. So you need that new. So Hines didn't do a good job, and now you got the new fellow in there. I forget his name, but
John Chen. Chen.
Then he's got a track record. So where do you think this goes? Where do you think? I've always said BlackBerry's mobile device, and it's not their devices. Everyone knows them for the devices, but their security software and their QMX software, that's the big game for them. But I've even always said their devices are actually really good devices. The problem was, because their delays back then, they just missed a cycle. Yep. Even guys like me, I was hardcore BlackBerry, and I waited and I waited and I waited. They kept on delaying. I said, I got to go. And I jumped over to Nokia, and you did too, actually.
Yep.
And one thing I said back then was, if BlackBerry can find a way to stay alive for this next generation, it means let you and I have our current phones for 2 to 3 years, and then when our renewal decision, because I think they lost a lot of users, their own users, for that very reason. So, you know, I'm on my Nokia. I like it. It's a really great phone. But I could easily go back to BlackBerry in a year and a half from now, just because I really like what they're doing with their phones.
Well, you know, George, and I think that what a lot of people miss sight of is that one of the most attractive things about them was not their hardware; it was their software. Mm-hmm. You know, they've got one of the most secure networks for phones, and with all of the NSA snooping and other snooping throughout the world, I think that you're going to see in the not too distant future that people want more security. They don't want to feel like their data is being mined all the time, that their data is easily, and when it comes to security of your data, when it comes to smartphones, BlackBerry gets very good marks in that regard. And so, you know, John Chen is really trying to focus the company on what makes them money. And, you know, IBM was one of those turnaround plays that I picked years and years ago in the 90s when Lou Gerstner came in.
And they went from hardware to software. Exactly what IBM did. It looks like BlackBerry is going the same way.
Exactly. So if that's the case, George, I mean, when we talk about, you know, turnaround for IBM from back in the 90s, or an Apple or things like that, you know, these things can go up in multiples. So that's what I'm looking for out of, I'm talking, you know, I think over the next few years you could see this go up 3, 4, 5 times kind of thing.
And let me show the chart here because I had it up. So you can see that, you know, it started to make its move here, right? It started making a move, but I wasn't convinced yet, right? I wasn't convinced. I got convinced once it broke through its 20-day moving average. That led me to make my call where I said I'm going to take a half position. Not a full. I didn't dive in with 2 feet. I said half position. Now, I had said that I'd take my second position at 775. Unfortunately, I was away on business for the last 2 days, and I missed that. So I'm still going to take it even here at 815. I don't care. But look at this right here, Alan. This is what really has got me in some great anticipation. You've got the 50 and the 200-day moving averages sitting pretty much identical. Let's call it 855, 860, just to, but one's 853, one's at 866. If it gets through there, I think it goes. And you know what? On the balance of probabilities, I'm going to make the call right now. I think Apple goes. I think we're looking at double digits next couple months.
BlackBerry. You said
so
Apple.
What did I say?
Wrong fruit. You said Apple.
Sorry, man. I don't know why I said. I'm so used to talking about Apple. I've never talked about BlackBerry. I think BlackBerry goes double digits, but we got to see. It's got to test this. But I don't see the momentum being stopped. I think it bounces off once or twice, but I don't think it's a resistance for very long. What do you think?
You know me, George, when it comes to charts, and I'm a big fan of, you know, watching what happens on the pullbacks, and what I really like here is look at this action. It's a lot like our resource stocks, actually. It got down to a low back in December, had a really good run from those $6, got up to 12. It's given back some of those gains, but it's retained a lot of them. And, you know, let's say I'm looking at projecting out a year, so you look at this low, you know, I think the next low is going to be after this next run. The next low is going to be $9, $10 kind of thing. And I do like what I'm seeing there. I like what I'm seeing here as well in the MACD. It's looking like it wants to trade up. I'm liking what I'm seeing here in this action. You know, over the last 4 or 5 days, it's gaining some momentum again. And even though it's gaining momentum, it's not doing it on a big spike in the day, right? So I'm seeing a lot of confidence coming back into BlackBerry. And yeah, this is the BB chart on Toronto. They're BBRY in the States. I'm a big fan of this company, and I love it as a turnaround play, George.
And you've got one extra moving average there, and I'll let you point it out because when I talk, it's the wrong screen. It's my screen, but you've actually got the 100-day on there as well. So show everyone the convergence of the 50, 100, and 200, and look where they're all converged.
Here you go. Here's what George is talking about. As I put my cursor, that's the 100-day. You see how it highlights?
Yep.
Here's the 200-day. So we've had a cross of the 100-day over the 200-day. The 20-day is turning around and starting to look like it wants to turn to the upside.
And the top one is your 50, I think, right?
Yep, that's the 50, and it looks like the 200-day is almost right at the 50 now. This thing is these moving averages are about to go this way, George.
No,
up in here.
All right, so I'm adding heavy on Monday, that's for sure. So that's our BlackBerry talk right there. Let's move it on to some smaller picks. Madalena Energy. You can see my screen here, Alan.
Let me make sure. Yep.
Madalena Energy is your pick. TSX Venture Exchange, MVN. Close at 68 cents. What I love about this pick, look at its 50-day average volume of 1.3 million shares a day on average. So I love the liquidity, but I want to hear the rest of the story from you. What are you liking about Madalena?
So yeah, Madalena just had some news out. I'm going to pull that up on one of my other computers here. And remember I picked this one, George, in the past. I can't remember where, but it was cheaper than where it is now. And you know, it's one of those oil plays that it's not easy to find a lot of good oil plays, but I'm a big fan of these juniors in the oil space. When they've got a lot of growth left in them, they had their quarterly, or they were testing a well that they came in with news on the other day. Came in at 1,000 barrels per oil equivalent per day from their project down in Argentina. These guys are focused down in Argentina, and they're doing very well. Look at this stock chart, George. July lows back here at about 26 cents. And then you go into a classic bullish trend. And then it had a good pullback that kind of shakes the market out, and then it resumes that bullish trend again. I'm really liking that.
What's that moving average it keeps bouncing off of there, Alan? When it takes a dip.
That's the 200-day or 100-day.
That's 100-day. Okay. There. All right. It keeps bouncing right off of that, so it kept it pretty tight.
Yep. And I didn't notice that until you just said that. Actually, that's a good spot there, I think. And so yeah, classic bullish trend. This company's in good growth mode. 1,000 barrels per day is kind of something that you got a threshold that these small junior minor or oil companies got to break through. And I like their fundamental story, and I like their stock chart. So
now, Alan, it has been weak the last few days, and I do see that they put out their annual numbers. So what do you attribute that to?
Yeah, I think they're spending a lot of money right now on drilling and stuff like that. I didn't have a chance to go into that really closely, but that would be my assumption, George.
All right, so I'm a little iffy. I'm just a little iffy. Long term, I think it's great. I'm a little worried in the short term here that it's broken down through its moving averages, even though it's bounced off the 100. We both see that, but it's at the bottom of its bands here. So I want to make sure that it kind of holds here. Make sure there isn't something in the store that I don't know about. But otherwise, solid company. 340 million shares outstanding, which is a little rich, but not bad. So it's not a screaming buy for me, but there's something to it. Fortuna Silver Mines, FVI, is your next pick on the Toronto Stock Exchange. 465s were closed at today. Up pretty nicely, pretty strongly. Low volume, relatively speaking, but I like the fact they do 435,000 shares a day because they're doing about $2 million in in trading every day. What are you liking about Fortuna? Because you've picked it a couple of times.
Yeah, Fortuna is one I keep going back to as one of my top silver picks, George. They've got a great management team that's been the family has been mining down in South America for a lot of years. They've got more than one mine. Earlier this week, when I talked about it on the show, they had just a spectacular drill hole. 3 meters of. I love it when these silver companies talk in kilograms per ton instead of grams per ton.
That doesn't happen very often.
These guys hit 2.6 kilograms per ton of silver and 10 grams per ton gold over 3 meters at their San Jose mine in Mexico. When you hit those bonanza grades, it always catches my attention. And just, it's just another in a long line of really good developments for this company. You look at the stock chart, another one that bottomed here in December. Man, we talked about that a lot, George?
That's why we made a killing. For those of you who are new to the show, combined we had a 40% gain just off our tax loss selling picks. You could have made your year on our picks between December 18th and January the 30th. We went 11 for 12. Our only loser was down 6%, and combined we had a 40%. We had a 40.7% move.
Pretty spectacular, and that was over 12 companies, 6 each. Yeah. So then they had the pullback. I was talking a lot in here about companies. I was saying it's time to take profits, time to build up cash, and here's exactly why you want to do it. If you were building up cash at $5, you can buy back at $4 a great company, and now look at the trend. It's starting to get back on that. This is much more sustainable, this kind of positive move. Whenever they do this, George, it's not sustainable. We all know that, right? That's why you got to take some profits in here after you see these kind of moves. And we saw these kind of moves in tons of companies we talk about on the show, and we pick, on a regular basis. But this kind of move here, much more sustainable, and I think it takes it into new 52-week lows in the not too distant future. Or sorry,
highs.
Highs.
Well, let me talk to you quickly about the price of silver, because it's been in the media. It took a real. Let's take a look. I'll bring a shorter chart up here. It took a real beating when it broke through, when it broke down through 20. Look right, hit 19, tried to recover. Yeah, went under 19 just the other day. Had a strong move today, but why that kind of volatility here? Because you can see my chart. Why that kind of choppiness? I think it's oversold. I think this is where you want to be a buyer of silver right in here. But you tell me what's going on in silver. Why the lack of confidence?
Yeah, well, gold got beaten down at the same time. And silver always gets beaten down as well. I'm just looking at silver and gold right now, and I'm saying, man, these things are oversold and primed to move up. I talked to a lot of people in the mining business, George, from the junior explorers, mid-tier producers, and even into the big companies. And the pipeline is in pretty tough shape right now. Not a lot of new discoveries that could, dramatically bring up production numbers. So supply is going to continue to be relatively constrained, and demand is pretty solid. And so.
But having said that, so I just want to point something out. Here is the gold chart. So at its peak in September, let's call it 14 and change. It's at 12.99, down about $100 over 14. Let's say it's down about 7-8%. But silver was call it 25, and now sitting at 19. So 6 over 25, you're talking about a quarter of its value. That's a huge hit compared to gold. Why is silver taking that kind of a beating?
I can't give you a fundamental, supply-demand kind of an argument, George. I can only see it as a trading situation in the short term. Just looks grossly oversold to me. I don't see.
Because you've had a couple of silver picks, so I want to bring that up. So you're thinking that, Fortuna does well. because you've got next up, you've also got U.S. silver and gold. If you can see it here on my screen, USA on big board TSX.
Yeah, and by the way, Fortuna Silver stock symbol is FVI.
FV.
I'll pull up
Victor, Frank Victor. There it is. I can see it right on your screen. So U.S. silver and gold, TSX USA closed at 50 cents today. You know, down 6%, 5.5%. And you've had them on the show before. What's going on with U.S. silver and gold? Is this a buy on silver weakness kind of situation?
No, it's actually more of a fundamental pick, but it benefits from also being a bit of a turnaround for silver kind of a play too. Yeah, I've been a big fan of USA. I've picked them before. They produced 385,000 ounces of silver in the latest quarter. Their production numbers are going up. Their cash all-in costs are reasonable at around $18 to $19. So this silver starts moving up, and a company like U.S. Silver is going to start making a fair amount of money from a project in Idaho. But look at this move, George. December lows here at around 26 cents. I picked it on the show a couple times in here. Had a really nice move. Gave back some of those gains. But look at this, George. It's retained a good majority of those returns. So on a Fibonacci kind of retracement, it's not broken through that first retracement, which is quite bullish. It's kind of created that sideways action with an upwards bias. I really like that kind of trend, George, after something's been beaten down, after it goes through a correction, and then it's kind of going sideways with that upwards bias. Now the MACD looks to get positive again. Histogram looks like it wants to is positive. So yeah, I mean the combination of the fundamentals of this company and then the trend, I really like this action right in here.
As a trader, I'm going to say I'm not liking it right now. Volume's too light. Big down day today. The technicals, to me, I've seen the opposite. I see, I'm seeing the opposite. I think the technicals look a little bit weak. Personally, everything looks like it's pointing down. Even you look at this histogram here. Momentum seems to be fading. I'd hold off on this one. I wouldn't. Fortuna maybe a little bit stronger, better fundamentals, big numbers, bigger volume.
A much bigger company too, George.
Yeah, I'd feel safer in that one. I'm not thrilled about this pick, and that goes to show everyone at home that we're not. This isn't a love-in where you and I rah. And you could be. There have been a lot of times I don't like Alan's picks, and he ends up kicking my butt. So take that for what it's worth. But just want to say I'm not crazy about that pick. Corvus Gold is next. KOR on the TSX big board. They trade about 100,000 shares a day. $1.50, so not bad. $250,000 a day in volume. What do you like about Corvus Gold?
Okay, so Corvus Gold was a company that I picked originally. I remember this one for some reason at around 80 cents.
Yeah.
But way back here, and then it moved up to about $1.20, and I closed off the position.
Yeah, I remember that.
I closed off the position because they had to recalculate redo their resource calculation, and anytime I see that, I get out of the way. And so it just basically went sideways for quite some time after that, and I missed this breakout.
And that happens, right? Can't catch every breakout.
Exactly. Now, why they had this breakout is they've got this new discovery, part of their North Bullfrog project in southern Nevada. And since then, they had a big run. They gave back some gains, but then I picked it again the other day on the show because they had their best results out yet. So even though I missed this run, I can get back in at around this level of this run. And I think that now that they've restated their resource calculation, and now they've got this new discovery, I really like the numbers here. I don't want to give you bad numbers, George, so I'm gonna pull it up. and just so you can understand what I'm talking about. In their last report, 14 meters of 6 grams per ton gold and 72 grams per ton silver. They had a 13-meter intersection of 5.6 grams per ton gold and 94 grams per ton silver. Really good numbers, fairly close to surface. I like a lot of what I'm seeing with this Yellow Jacket discovery that they have, and I'm ready to get back on the bus.
All right, I can't argue with the fundamentals, and in this case, it seems like the fundamentals trump the technicals right now because there's new information in the market that hasn't been absorbed. And as usual, Alan's on it. And when you've got that kind of information, sometimes, so if you're going to buy it, if I'm going to be a buyer, I'll give it room to breathe here. So if you're going to be a buyer in the $1.50 range, I'd probably set $1.38 as a stop loss or something, just in case. Otherwise you go for it. And by the way, Alan, I think this time when we should tell people too, what Alan and I pick on the show, what he picks on the Daily Show, what we put out on Twitter, those are our picks. You're not supposed to really follow. If you follow them to follow our logic, follow our ideas, but what they're supposed to do is provide you with your own ideas to go do your own due diligence, talk to your own investment advisors, and family and so on and so forth, because we have different risk tolerances and different skills than you do at home, and you may be a better trader even. But I want to be clear about that we're not sitting here
telling people, most important thing
got to go buy this.
We're trying to give you our opinions of what we see happening, and with the proviso that you go out and do your homework and speak with your financial advisors before making any investment decisions. That's really important. And the way I always look at it, George, is I like to see good people and watch these analysts, and it's not because I always agree with them. Sometimes disagreeing with an analyst can turn out to be the best thing, where I go, I like something, he doesn't like it, or the other analyst likes it and I don't, and it makes me think in another fashion so that I either get more confident thinking, hey, he's out to lunch, he's wrong, I like this for these reasons, so I gain even more confidence. So that's really what we're trying to do here. We're not stockbrokers.
Alan, wait, and that was, hold on, was that your, well, we still got Klondex Mines, right?
Yeah, no, I have Corvus. Now I'm pulling up Klondex. All
right, we still got Klondex. Because I just saw that while you were talking there on my, because I've been away for a couple of days, my most actives just popped up, and Probe has taken a hit. So I want to talk about that chart.
Okay, let's do that after KDX.
Yeah. So let's do KDX. Klondex Mines, 130,000 shares a day on average. $2 is closed at $1.95. So again, $250,000 in trading volume. Like that, it means it's not too hard to get in and out. What are you liking about KDX? Trades on the TSX under KDX. What are you liking here?
I think it also trades in the States too, George. Check that out. But why I like it, George, is they had some news out recently. They had a PEA done on their Fire Creek project, and it came out with some good news. Now, this isn't a huge deposit, George, but it's one of those ones that can make a lot of money. Their all-in sustaining cost on this is $636 an ounce. 5-year type production. It only has a resource of about 280,000 ounces of gold. But I've seen these before, George, and what generally will happen with these kind of things is that as they're producing, they're drilling ahead of themselves to keep trying to find more resources. And I really like to see these projects when they come in at really low all-in sustaining costs. $636 is about the cheapest that I've seen in a long time. I think that this one could, and it's not their only project. I've picked KDX in the past. I can't remember when. Obviously, looking at the chart, if it was
if you get us your picks, we could plot them like we've been trying to do the last 2 months. I'm going to call you out here on the show. Get us the pick so we can actually say, yeah, you called it on that day.
Okay. I know what you're telling me. I'll get it done, George. I'll get it updated. But anyways, so KDX had a low back here in July around $1. It's been on a classic bullish trend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And I just think that trend continues, George. They're in Nevada. You know, anytime, it's not easy to find good Nevada plays, but I've got a few on my list right now. In fact, I talked about two of them today: Klondex, Corvus, and what was that other one I've been talking? Oh, Pilot Gold and Nevada Sunrise. Those are kind of the ones in Nevada that really have my attention right now. And Nevada is a great place to be mining gold. You look at the technicals here, MACD looking like it wants to get more positive. The trend line here, here's your 100-day, and every time it gets close to the 100-day, it pops off of that.
Yeah, you got to pay attention to that. Really good support there. Really good, you know, really nice support for a long time, right back to October.
Yep. Now it's trading above the 20-day, and it looks within striking distance of the 50-day. Good combination on that one.
All right. Let's bring up Probe Mines.
Okay.
So I just kind of have, because I know you've picked this in the past quite a bit, and to see it make that move there. So let me get that. I think I lost that chart. So let me bring it up here. Hold on. PRB. In a big, really big dark day here, down 13.5%, 803,000 shares. What do you know? Do you know anything about what's going on there? Because it typically does 220,000 shares a day, and it did 803,000 shares today, down 38 cents. So we may be talking out of turn here because I don't see any news.
Yeah, they had news on the 30th. So
yeah, it was decent news, and
it was good news. It was good news, George.
Because this bailout happened today, so 4 times the volume, down 13%, and it's even broken down through its 200-day. Which is pretty significant because it hasn't done that since good old 7-Eleven days when everything was ridiculously cheap. Look at my chart right there.
Yeah.
You know, everyone at home's got to know 7-Eleven is when Al and I started up this show and we said we're going for it. So going back to that date, that's the last time, you know, July the 10th, and we did our show on July the 11th. So that was the last time it was below its 200-day, and now it's poked below, you know. So I'm torn there. You got to move from 380 down to 240.
Yeah, you know, I am too, George. And what caused me a lot of concern that I was going to pick this company, and because I like the deposit so much. Now you could be into one of these situations where the market knew that some news was coming out, and they were anticipating something better than what they've got. I mean, I'm never going to sneeze at 71 meters of 3.5 grams per ton gold, and then in that they had a sub-interval that was even higher grade. This is a serious discovery this company has. It's in Ontario. It's growing. It keeps growing. This, I think, could be, you know, maybe we're seeing some profit taking from buyers that bought back here. I mean, we do see a big spike in volatility.
Look at that volatility, though. If you can take a look, just
show. I know that's what scares me.
Show everyone those tails, because that's the trading range on each of those days. I mean, that's some crazy volatility.
Look at this day. Look at that. It traded as low as $1.95 and started the day at $3.45.
That can't be that can't be accurate, can it?
It could have been a flash trady kind of thing. I don't know, but
still, even if you take that day out, look at all the other.
Look at the next day.
Look at the volatility of all the days since then.
Look at the little 266 to 332. The next day, 269 to 296.
Yeah.
Like you said, every day. I was ready to pick it, George, at the beginning of the week, but that intraday volatility kind of scared me away. But I can say that there's nothing wrong with the fundamentals. The only thing I can look at is
that we know of.
Well, they just put out good drill results, so the gold isn't gone anywhere. Only thing I can look back at, George, is here we had some big volume. Stock was trading at 220. Here we had some big volume. Stock was trading at less than $2. Here we had some big volume trading at less than $2. You know, when you see a turnover like this, people start getting shaky up here, right? And then you see this big volatility, and I can only think that there's a follow through in that fearness, and maybe some of these people that bought it prior to here, you know, the start of the year, these guys might be coming out. That's the only thing I can see, George, right now.
What if there's a private placement done as well? What if there's a private placement where the money's come free? I guess that's something we got. Anyways, that's due diligence for everyone at home.
Exactly. That's a good one to do your due diligence on, because to me, George, it's a great project.
By the way, and finally, BSM, just I noticed this too, again, because I was away for a couple of days. Remember you and I were talking about it when it got really cheap down here. Yes. And I said, hey, you got to be a buyer somewhere in here in the 220 to 225 range.
My memory serves me correct. You were saying right around 215. It's my memory, so take it with a grain of salt.
Yeah, it could be. Yeah, you're right. But I remember down here we're saying this is where it becomes a buy, and it's really made some pretty good moves.
Well, we were both perplexed at good things happening with the company, and yet the stock was getting beaten down. And then you made your technical call after we were talking about that, where you saw a 215-ish number where you wanted to enter, and you even, I think you missed the trade because you were away that day or had to go to a meeting.
Yeah, it was another day where I missed it. I missed it personally, but I remember because it hit a low of 211. So there was time to get, yeah, I think you're right, and there was time to get into it because it hit 211. Yeah. And then it's taken off since then. So we'll watch.
And you were kicking yourself in the butt because that day you forgot to. You were going to a meeting and you didn't put your trade in or something.
Yeah, I didn't have time. You know, morning, rushing around, get the stuff ready, get into the car, and I didn't have time to. And you know, that happens sometimes. You know, but the good thing is when you watch this show, man, you're in the game. You know, just when you watch the show, you're in the game. We're telling you about what's going on and where the activity is, and we continue to make some pretty great picks. But you have to do your own due diligence at home. Remember that, and consult your advisors.
Bottom line, and anybody who ever wants to argue with this, people aren't getting this kind of coverage anywhere else. We separate the wheat from the chaff. Even if we're wrong, we're giving you the kind of companies you should do your homework on. So when it turns right, those are the companies you should be looking at. So
that's exactly it.
Those are the kind of things that I judge us on, and I think we've done a phenomenal job.
Yeah, the one common denominator is every company is fundamentally strong. There are no flyers on this show. They're fundamentally strong. You always have that as a base, and after that, what happens is all technical. Thanks for another great show, Alan. Thanks for everyone at home. Have a fantastic weekend, and make sure to tune into Alan as often as you can around noon every day to find out what he's had to say about some of the small cap picks that are going on the day. Remember, this is the end of the week, and we talk about things in hindsight. Watch them every day, and you'll catch things very fresh. Have a great day, Alan. Have a great weekend to everybody else.
Yes, thank you very much, George, for plugging the show and everything like that. You all have a good week, great weekend. I'm going to enjoy the sun, and I might even go hit some golf balls tonight.
And hold on, I just remembered something. You didn't mention the chart company that was nice enough to give you the charts.
Yes, my friends over at Chart IQ. Those cool charts that you see come from the folks over at Chart IQ. They're nice and big for me. I like those big charts, and so I can play around with them. And they've given me a free membership. Chart IQ is the name of the company. Check out their app. It's great for anybody who needs charting services. I highly recommend it.
All right. See you guys.
Have a great one.